India lives in the heart of every Indian, whether he or she is settled within the country or outside India. India's overseas population is largest in the world with more than 16 million people. Most of the non-resident Indians, which are popularly addressed globally as NRIs, have bank accounts, investment in properties, rental income, fixed deposits in India. All the NRIs having income generated from India are liable to file their income tax returns in India every year before 31st July, and for this year their due date is 31st July 2008. A non-resident Indian needs a PAN if is required to file an income tax return, and for those who wish to carry out a financial transaction for which quoting of PAN is mandatory. The procedure to obtain a PAN for an NRIs is fairly simple and similar across all categories of individuals. However, NRIs need to provide certain documents which are specific to them. NRIs can provide a foreign address as residential or office address if they do not have any Indian address of their own. PAN card dispatch facility by Government of India is available outside India also, only in the selected countries. NRIs do need to file their income tax returns if they have earned any type of income. If you are a resident Indian, your global income is taxable in India. This income may have been earned or received outside, but it shall be taxable. In case this income is also taxable in another country, you can take the benefit of double tax avoidance agreement. Several queries comes to us that whether NRIs can purchase any kind of property in India. In answer to this, the Reserve Bank of India has given general permission to NRIs to purchase immovable properties. The property does not grant power to acquire any or every property. The NRI are allowed to purchase only residential or commercial property. So the non-residents are not allowed to purchase any agricultural land or plantation properties. For NRIs and persons of Indian origin, the overseas income and transfers in foreign currencies are completely exempt from Indian income taxes. However, account in India has to be designated as NRE or FCNR. Interest earned in NRE and FCNR accounts are completely exempt from income taxes. While buying property in India, it is not mandatory for an NRI or a person of Indian origin to have a PAN number for entering into a property transaction as per Rule 114. Now we will discuss about income tax on sale of property by NRIs. We have observed that neither buyer nor an NRI seller are aware what to do. You know that Income Tax Act is not that complicated. It depends on the person who interpreted it. When selling a property by an NRI is concerned, there are three main points which are to be taken care of. The first is the capital gain arising on the property, the second one is the TDS, and the third one is the reinvestment. Capital gain from sale of property, and when the capital gain arises on it, that capital gain is to be taxed at around 22 to 23% if NRI is selling a property in India after holding it for more than 2 years. In case holding period is less than 2 years, the short-term capital gain will be taxed around 34% irrespective of the slab for the NRI. Not many people know that capital gain taxation is same for both resident Indians and NRI. But only difference is the calculation and deduction of TDS. Basically, the main emphasis of Income Tax Department is that any capital gain arising out of sale of property in India, that income tax should be paid in India itself. For resident Indian seller, as he is staying in India, therefore he does not have any other option but to comply with the income tax rules and regulations. But as NRI is concerned and an NRI is based and staying outside India, therefore it becomes difficult to ensure that the capital gain tax compliance after the property transaction is completed. In order to ensure compliance, Income Tax Department came out with it is mandatory in the hand of the buyer to deduct TDS at the rate of around 20 to 21% from the seller when the property comes into the ambit of long-term capital gain tax when the transaction is done with an NRI. In case of short-term capital gain, TDS will be around 34% irrespective of the tax slab of the NRI. Buyer will deposit TDS with Income Tax Department. TDS is applicable even if the value of the property is less than 50 lakhs. For resident Indian, TDS of 1% is applicable only if the property value is more than 50 lakhs. But this 50 lakh limit is not applicable for the NRIs. The rule is that NRI is liable to pay capital gain tax not only on the capital gain arising out of the sale of property, but unfortunately TDS is deducted on the total sale value of the property. Therefore, in most of the cases, what happens that there are no gains as such from the sale of such properties, and actually NRIs incur losses from the sale of the property if TDS refund is not claimed. As a result, NRI has to go through the process of claiming TDS refund from Income Tax Department. Now the last option in this and the point which is concerned is regarding the reinvestment. That's how that the NRI who is selling off his property, he should arrive the maximum profit. The only option is to reinvest the said proceeds into the country itself instead of repatriating those funds back to his home country where he is staying. For every NRI who is living abroad, he can understand very well that there is something so vibrant and wholesome about India that makes us miss it dearly when living abroad. Our love for our country goes far beyond the country's corruption, pollution, poverty, and injustice, because we all say India, our country, in a light no one else can. Don't let us wrong. We too detest the polluted air, the maze-like streets full of cars and auto rickshaws, the lenient regulations and constant violence against women. But we cannot deny the perpetual existence of the little bit of India we all have inside us. Keep watching and subscribe our channel. We will come again with several helpful videos. Keep watching. Jai.